as part of this whole deal, rather than just being, tenants in
I mean,
a relationship?
It's certainly very possible, and then they would have a lot more control. I think some of these co-tenancy clauses, too, cause some fear and ripple effects, because if you lose a really big tenant, whether it's a department store or a very large Forever 21 space, you could then lose other tenants, and that gets very quickly out of hand, and your vacancy goes higher. But that's a very interesting thought.
The last final quick word on this. So is it over, you think, or no? Do you think when they say, look, these talks have fallen apart, does that mean that's
No, look,
it?
I don't have any of my own reporting on these talks specifically, but I think that it's never really over, and I think as the bankruptcy days and clock starts ticking in court, sometimes that price actually gets lower if there aren't that many bidders.
True.
So it's possible that they could just be waiting and see what happens at the very end.
Yeah, because they have so much skin in this game, as you said. All right,
For sure.
Facebook, meanwhile, a lot of headlines here today, taking on regulators and taking on Elizabeth Warren. First, the Washington Post detailing how the company geared up for its fight with the FTC, which resulted in that record $5 billion fine. The Post reporting the company thinks it would have prevailed in court had it come to that. And now leaked audio from an internal meeting shows CEO Mark Zuckerberg's confidence on that and when it comes to Senator Warren's call to break up big tech. Listen.
Like Elizabeth Warren, who thinks that the right answer is to break up the companies, if she gets elected president, then I would bet that we will have a legal challenge, and I would bet that we will win the legal challenge. Does that still suck for us? Yeah.
Warren fired back in a tweet saying what would really, quote unquote, suck is if we don't fix a corrupt system that lets giant companies like Facebook engage in illegal anti-competitive practices and so on and so forth.
First of all, he's a human being.
He sounds like
he
one.
Sounds like
Who
a human.
knew?
He's not the robot that we so often see in public here. So that's refreshing to hear.
I would say this. I would say, and folks who watch this program know I'm not the biggest fan of online data and privacy sharing, that sort of thing. I have real reservations about it. But it made me feel good to hear Mark Zuckerberg talk like a coach in the locker room if you know that your team is down 3 touchdowns at halftime. I mean, this is the kind of speech you should be giving as a CEO, founder of a company, if your company is being assailed from the outside.
Right, but is it the wrong speech
government?
if you're a concerned consumer who wants to hear them say, well, we have to fix, here's how we're going to fix our practices, and here's some, you know what I'm saying? Like, instead he seems to say, we're going to win, we're not doing anything wrong, we're going to rally the troops.
If they really believe that they're not doing anything wrong, then that is the speech that you should be giving. Tell the employees, hey, listen, we've got a real problem on our hands. Let's go out there and let's try to do this. Let's fix this. Let's win this game. I understand why Elizabeth Warren is saying what she is, because they have a very valid concern. I share those concerns. Right. But Mark Zuckerberg is doing, from a leadership standpoint, what a lot of people say he should be doing. Ironically, which is to take a lead on the stand.
Yes, but I heard Jim Cramer, when he was talking about this earlier today, was joking, please break up these companies, because the returns for the last 52 weeks have actually they're all trading below their all-time highs. Sure, it's been a great year to date. Facebook's down 15% from its all-time high.
I'm not sure that's as a result of bad business. I think it's just the regulatory haze that's formed over these companies and the fear that these regulations are going to come to fruition. Now, I've been saying, given all of these investigations and everything that's coming at them, walking away with just a fine of some kind is not going to be acceptable. They're going to have to give a pound of flesh at some time. I know they're saying it's not going to happen. He called this an existential move on Elizabeth Warren's part to call for the breakup of the company. But I think there's going to have to be some sort of divestiture at some point by Facebook.
I think it's good at least that they're addressing it and thinking about a possible playbook if this is eventually what happens. I think if you're an investor, it's good that he doesn't have his head in the sand, right? Yeah. That he's thinking about this as a real possibility.
Well, sure. I mean, I'd still like to hear more about why they think they would prevail in court. And
what do you expect him to say?
Well, no, but the company
we hope we don't have to go to court because we probably won't win.
To the Post's point of this is something they really thought, okay, we'll fight this, here's our plan, and so forth, but we will win in court, and that I find fascinating. All right, got to go. Guys, thank you all. Appreciate it today. Dominic Chu, Courtney Reagan, Bill Griffith. We've got a news alert on GM. Let's get over to Phil LeBeau for that. Phil, what's going on?
Kelly, take a look at shares of General Motors trading at the or near the lows of the session. The company has issued 6,000 temporary layoff notices to workers at its plant in Silao, Mexico. The significance of this, that plant is where GM builds the Chevy Silverado as well as the GMC Sierra pickup trucks. There are 2 plants where they build those trucks in North America. They're in Silao, and they also do it in Fort Wayne, Indiana. Well, Fort Wayne obviously shut down because of the UAW strike, and now the plant in Mexico effectively shut down because of part shortages. So they've issued 6,000 temporary layoff notices. Take a look at shares of GM, down over 3%. Kelly, back to you.
All right, so temporary, but again, a larger and larger ripple effect from those strikes, especially for one of their biggest products. Phil, thanks very much. Phil LeBeau there with the latest news on GM. We're at session lows in the market. The Dow's down 330 points. Right now, that's 1.25%. Coming up, who's to blame for the recent IPO carnage? Is it Silicon Valley, Wall Street, or someone else entirely? We will debate that. Plus, check out all the major averages. It's not just the Dow, which is at session lows. The S&P is also down 37 points right now. The NASDAQ down 92 for better than 1% declines as markets continue to sell off after the ISM report this morning. We'll be right back.
Municipal bonds don't typically get...
At DFS, we know how important it is to be comfy, to have somewhere to put your feet up, and enjoy some well-deserved downtime. So our skilled craftspeople like Barbara here go all out to make sure every sofa we make is perfect.
I treat every sofa that I sew as if it's coming to my house.
And she's very, very particular. With every sofa carefully handmade to order, everyone can get comfy at DFS.
No one wants to get caught in the rain in London. We're with you. So our boilers come with 2 years interest-free credit to avoid a big chill to your wallet. You'll get a 5-year British Gas warranty. And now we can even quote by video call after work or weekends at a time that suits you. Get a quote by the 30th of November and get £150 off a new boiler or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $104.9. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
MLB is right here on TuneIn.
A swing and a drive to right field. That's it. Well, Ramirez back, and that ball's gone.
And to find it all, you need to search MLB on TuneIn.
By the wall, out of here.
Home and away calls are a click away on TuneIn Premium.
Welcome back. The year of the great IPO is turning out to be a pretty big bust following disappointing debuts from Lyft and Uber. Now, Endeavor and WeWork have shelved their plans to go public. What went wrong and who is to blame? Silicon Valley or Wall Street? Joining me now are Slated CEO Stefan Paterno and Dick Beauvais is Chief Financial Strategist at Odeon Capital Group. It's great to have you both here. And Stefan, I'll start with you. I don't know if you would defend Silicon Valley. I mean, you yourself saw when you guys went public in 98 or 99, this huge one-day pop, which Bill Gurley today is saying, and I will quote, he says, investment banks have been fleecing companies, Stefan, by pricing shares low so they pop on their first trading day. It benefits institutional clients who buy at the offer price and flip their shares when they soar. Is this Wall Street's fault?
I would say that, well, it takes two to tango. And when you've been in this business, certainly in the tech sector and living through the IPO era for 25, 30 years, you start to see these cycles and repeating patterns that are rhyming. Yes, I've stated ever since the Globe.com IPO, that I think the public markets, the gamification of how to go public and how to play the game every single quarter is a very broken system. It's very myopic. It's very short-term driven. And of course, whoever, especially Wall Street, but investors in general, all want to get rich quick. So there's a lot to unpack here in terms of reforming the process of going public, what it's like being a public company, the gamification of it, but also everyone is looking to make a quick buck, and we're now seeing a repeating cycle of taking the most exciting and overvalued and overhyped companies and trying to see who will be the last investor who will come in at the table and take on all the losses.
Yeah, so you're saying it takes two to tango, the companies and Wall Street. Dick, we know there's this meeting of venture capitalists. They've invited more than 100 startups to a San Francisco meeting, starts at 1 p.m. local time, to convince them to go public through direct stock exchange listings instead of IPOs as a way of kind of getting back at Wall Street. What's your reaction to that?
Well, I think that the reason that this is happening is because, there was a shortage of shares in the marketplace. In other words, with all of these companies buying back stock, with no issues coming to market a couple of years ago, you were developing a shortage. So the prices of stocks continued to rise at a pretty rapid rate. And we've had this 10-year bull market. So the net effect is it would be normal for Wall Street to be going to Silicon Valley and any other place in which they can find more shares to sell because the demand for shares was so high. Now, as was just indicated, it's a major, if you will, dance to determine who you're going to pick as your underwriter and who you're going to pick in terms of the company that you want to underwrite.
Right.
And therefore, it's not. You can't easily blame one side or the other. But the bottom line is, once you start meeting the total demand for shares, and think of shares as just a product being sold in the market, once you start meeting the demand for shares, it doesn't matter whether the underwriters do it or whether the venture capitalists want to go directly. So, the prices just won't go anywhere.
Dick, here's the data, which this is from Jay Rader at the University of Florida, says for the past decade, Goldman led in underpricing venture capital-backed IPOs. Its issues on average notching a first-day gain of 34%, Morgan Stanley 29%. Is that an indictment of what they're doing or what they're doing wrong? And if these companies start to push back, do Goldman and Morgan have a lot to lose here potentially?
Well, I don't think they have a lot to lose because ultimately, if you want to go public, you're going to have to, and you're a large company, you're going to have to use the services of Goldman, Morgan, J.P. Morgan, Bank of America, et cetera. You can't distribute your stock evenly. And this gets back to what the issuer wants. In other words, does the issuer want, the stock spread to retail? Does it want an institution? What size blocks are they willing to sell? Do they want it to be sold overseas? Do they want to give some incentive because they think a year and a half from now they're going to come with a secondary?
Okay.
So there are so many questions that have to be answered. It's the company that has the best marketing plan that will generally get the deal.
And here's what Roger McNamee had to say about all this this morning. He was on Squawk Alley, guys. Take a quick listen.
I don't think this fixes the core problem in venture today, which was we've had a mania around growth at any cost, really taking Reid Hoffman's notion of blitz scaling and saying, if you get big enough, it doesn't matter that your business model is terrible, you'll still create a lot of wealth. And I think we're now seeing that there's a dark side to that because the public market's looking at this and saying it's ridiculous. This is not about how you list. It doesn't matter whether you do a direct listing or an IPO. What matters is that you have a business model that's worth something.
And again, Stefan, do you think he's right about that, and that the timing of these IPOs at what people have said is peak losses is the real problem here?
Yeah, I tend to agree with that particular statement. And as I was mentioning, we're going through these giant cycles, hype cycles, and then where the public market, which is usually the last player to come in on a series of financings, is now wising up. And I would say that we went through this in the late 90s, right, where anything.com was exciting and became overvalued. I lived through that myself with theglobe.com. But then, when the internet renaissance kicked in, Google going public, Facebook eventually going public, those were companies generating billions in profits. Now we're hitting that peak hype cycle again, and it really started off a year or two ago with Snap's IPO, followed by Lyft, Uber, and now WeWork failing, which is to say that these companies are simply losing too much money and getting too big for their own britches. And the public market is saying, wait a second, how many years do we need to wait and subsidize these losses before we prove they can make profits?
And again, if Airbnb goes the direct listing route, which is, that reported this afternoon as well, it will be because they're EBITDA positive, which is a whole difference between them and some of the other names that have struggled. Guys, thank you both. Appreciate it today very much. Stefan Paterno and Dick Beauvais. Coming up, a spying scandal at one of Europe's largest banks has led to the departure of one of its top executives. That story is ahead. Take a look at the Dow right now. We're down about 312 points. The biggest losers are Cisco, 3M, Dow, Caterpillar, and McDonald's. Cisco down nearly 4% there, and even Macy's now down about 1%. We're back in 2.
When I see obstacles,
today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throw, he steps up, he's going deep down the right side. Andrews.
You can listen to it all for free.
The end zone, touchdown.
At home, on campus, or on the road, hear the excitement and pageantry of college football all season long, free on TuneIn. MLB is right here on TuneIn.
A swing and a drive to right field. That's it. Well, Ramirez back, and that ball's gone.
And to find it all, you need to search MLB on TuneIn.
By the wall, out of here.
Home and away calls are a click away on TuneIn Premium.
From the TuneIn Studios, I'm Fonseca, the Daily Sports Update. Major League Baseball wildcard action for the American League. We've got the Rays at the Athletics. This one's going to be Wednesday at 8:09 p.m. Eastern. How are the teams feeling?
It's really amazing. It's just a special day. More importantly, we get the win and in a crucial time, and we battle our butts off today.
Now, if you want to catch that game, search MLB. That's your TuneIn Sports Update. These are the top buzzing stories on TuneIn.
Alex Rodriguez did 3 dress rehearsals before proposing to Jennifer Lopez.
My assistant Ashley played Jennifer, and we rehearsed this 3 days in a row, Monday, Tuesday, Wednesday. Now on Wednesday, it rained.
Sarah Jessica Parker is open to a Sex and the City revisit.
I think, to do some episodes of Sex and the City, that those characters never talked about social media, which I just think would be really interesting.
Those were the top stories that are buzzing on TuneIn.
Make sure to follow TuneIn today, so you're always in the know. Twitter, Facebook, Instagram. Just search @TuneIn.
Welcome back to The Exchange. A top executive is out at Credit Suisse following a spying scandal at the bank. Jeff Cutmore has been on this story for us and is live in Zurich with the very latest. Jeff, what can you tell us?
Yeah, hi, Kelly. Good evening from Zurich, where Credit Suisse will be hoping to draw a veil now over this whole sorry saga. A personal falling out between the CEO of Credit Suisse and the head of the wealth management business, Pierre-Olivier Bouilly, turned nasty with ultimately the head of that investment business deciding to move to UBS. And that's where the chief operating officer stepped in and initiated a spying surveillance operation to make sure that no further Credit Suisse staff were poached. Well, things turned farcical when the outgoing head of wealth management basically confronted the investigators on the streets back on September 17th and then told management he was unhappy about this story and called in the police. Subsequently, Credit Suisse have carried out their own investigation. They say the chief operating officer has to go. He has resigned along with the head of security, but the CEO's job appears to be safe at this time. My question, though, to the chairman of the board, Urs Rona, is if the chief executive didn't know about this surveillance operation, is he actually in control of the bank? Let's hear what he had to say to me.
Obviously, this was a key focus of our investigation. We looked at it, and obviously we base our decisions on the evidence we have. We have obviously discussed this point with him. The investigators asked him or interviewed him about this. We have absolutely zero evidence that he was informed about it.
The bank made a formal apology to Iqbal Khan, that outgoing head of the wealth business, and for the time being, CEO Tidjane Thiam appears to be safe, but I have to say the shares down nearly 3% at the end of trading here in Europe suggests that maybe some investors are still not quite sure about the explanation the bank has given. Back to you, Kelly.
Yeah, Jeff, thanks. Especially, consultant, the Wall Street Journal said, who had helped investigators, help Credit Suisse hire those investigators, committed apparent suicide last week. This is straight out of Hollywood. It's tragic, unfortunately, not just farcical. Jeff, appreciate it. All your reporting, sir. Thank you. Good to see you. Jeff Cutmore is in Zurich for us tonight. Coming up, why California's new law to pay college athletes could become a big legal headache for the NCAA. We'll have more on that next.
And Doug. You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Jamie Theakston and Amanda Holden.
Hard breakfast. Tom Hanks is our special guest.
You're either being punished or rewarded. I'll let you decide.
I did do a whole show of grease on my front lawn when I was a kid. We charged everyone 10p. We raised a £5 and I gave it to Bishop's Waltham Gymnastics Club towards a new crash mat.
Do they get the crash mat?
I mean, it took a couple more years, but yeah.
It does happen to normal people like you. You've won £20,000. Well done.
I love this game.
Hard breakfast
with Jamie Theakston and Amanda Holden. Weekdays from 6:30. Listen on your radio, global player, or smart speaker.
Play hard.
The 1304 LNER train, Coach C. Taking aunties with cold hands to nephews with warm cheeks in Edinburgh. Remorseful revellers back to their beds in Leeds. Business mums gliding over the Forth Bridge towards a door in toddlers in Newcastle. And a band heading to London to our group of strangers in a tiny pub. This is us. These are our journeys. This is our LNER.
Rescue stressed, irritated skin with Estee Lauder's newest innovation, Advanced Night Repair Intense Reset Concentrate. Rescue and reset the look of skin with SOS technology. Skin feels instantly calmed, soothed and strengthened, revealing a more radiant, smooth and rested look. Face life head on with Estee Lauder's new Advanced Night Repair Intense Reset Concentrate. Why not try it for yourself? Head to your nearest Estee Lauder counter for a free SOS mini facial.
Welcome back to the exchange. Just about 2 hours of trading left today. Look at the markets right now. The Dow's down 327 points, so we're pretty much at fresh session lows. 1% declines for all the major averages, and yields on the move today. We saw an initial pop after some weak Japanese auctions overnight, but then the U.S. weak manufacturing report this morning reversed that trend. You can see there the spread between the 2- and 10-year yields narrowing. The transport's getting hit, now at session lows and below their 200-day moving average. Union Pacific and UPS both down more than 3%, and gold moving higher on this down day. We'll have much more on Power Lunch at the top of the hour. Meanwhile, California's Fair Pay to Play Act is being hailed as a game changer, allowing college athletes to profit from their name, image, or likeness for the first time. It's facing pushback from the NCAA, with critics arguing it could lead to sham endorsements, fewer rules, and even the demise of college sports. My next guest is a sports law expert who spent more than a decade on both sides of the bargaining table as an NFL front office exec with the Packers and as a player agent with the likes of Michael Jordan. Joining me now is Andrew Brandt. He is executive director of the Jeffrey Moorhead Center for Sports Law Study at Villanova. Andrew, it's great to see you. So my first question, you were saying the NCAA was already working on loosening up some rules. What specifically might they have to come up with now in order to prevent a maelstrom here?
Yeah, Kelly, there is a committee working on this already, headed by Val Ackerman, the chairman of the Big East, and Gene Smith, to come up with recommendations about this very issue, name, image, and likeness revenue for athletes. They're due to report on something later in the fall, but obviously this is going to push up the time frame and make some other issues. They've got to address this. They want to loosen up restrictions. They don't want it to ever get near the idea of pay for play, where you lose amateurism, however we define that in college sports.
So here's what our former colleague Darren Ravel said about this last night. He said, this is what comes with a move like this. The end of the NCAA, he says, fewer rules and more cheating, and the complete professionalization of college sports. Players likely won't need to go to class. You agree with that?
I think it's a little hyperbole. What we're going to see, though, is potential recruiting violations. Whenever there's a law like this or a restriction loosened, there's going to be abuse. And maybe schools do these kind of athlete compensation packages when they're recruiting, and it becomes an arms race to get the top players. Listen, the top players hold all the cards in basketball and football. We know that. That's not going to change. That may exacerbate a little bit. The key is what happens to the 99.9% of the other athletes. And now maybe you have opportunities to go do autograph signings, maybe to get some money for jersey sales, for EA, for video sports, and even for like swimmers and golfers and tennis players to go out and maybe do some clinics and things like that, which they haven't been able to do. So it could have far-reaching effects, but I don't think it's the death of the NCAA, as some would suggest.
Right. The Pac-12 itself, the Western Conference, is worried that it would reduce opportunities for student athletes in the Olympics, have a negative impact on female student athletes because they wouldn't get as much. Real quickly, Andrew, is this the end of the NCAA as we know it?
Listen, 2023 is when this law goes into effect, so we have a 3-year runway to get something done. The NCAA has talked about litigation, they've talked about these new rules, they've talked about all these things, and now we have Florida and New York and also states following California, and the NCAA wants a federal solution. So there's a lot of chaos right now.
Yeah.
But again, a 3-year runway to get this done, and I think the NCAA is going to come up with restrictions, loosen them up, and see what we can come up with so we stave off Armageddon.
Yeah, so the momentum is still in that direction no matter what happens here. Hey, Andrew, thanks very much.
I think so.
Appreciate it. Andrew Brandt joining me for the exchange today. That does it for us. Power Lunch begins right now.
Thank you, Kelly. We'll see you in just a moment. I'm Melissa Lee. Here's what's new at 2 on Power Lunch. A slowdown shocker. New manufacturing data hitting its lowest level in a decade, and the markets are feeling the heat. Plus, shots fired in the free trade wars. Charles Schwab is eliminating fees for online trading. That move cratering all the brokerage stocks. And Facebook CEO Mark Zuckerberg caught on tape slamming Elizabeth Warren and railing against a potential breakup. The details in his new response straight ahead. Power Lunch starts right now.
And welcome everybody to Power Lunch. I'm Tyler Matheson. Good to have you with us. Stocks are under pressure, and I do mean under pressure. Down by more than 300 points on the Dow on that weak manufacturing data. What a way to start the fourth quarter. The S&P and the NASDAQ down 1% or more in each case. Take a look at what's leading us lower. That would be industrials. Those would be manufacturing companies. Materials, the suppliers to the industrials, and energy. All of those sectors down 2% or more, Kelly.
Tyler, thanks. For more in the markets, sharp U-turn lower after that weak ISM number. Let's get down to Bob Pisani on the floor of the New York Stock Exchange. Bob?
Hello, Kelly. This is a big miss on the September manufacturing, and I think this is a problem for the markets here. The S&P moved in a 50-point range, almost 1.6% lower since the ISM report came out at 10 a.m. Eastern Time. This is a very large move, unusually large. According to Paul Hickey at Bespoke Investing, since 1998, the S&P has moved more than 1% on days the ISM is reported less than 8% of the time. So this is an outlier in terms of the response. This outsized reaction was partly just the sheer size of the miss. It was not just a big miss, it was contractionary, and it was the lowest reading in 10 years. The other reason for the outsized reaction, in my opinion, despite all the turmoil around global trade and a global weaker economy, the S&P is still only 3% from historic highs. That leaves a lot of risk to the downside. So this immediately dropped, as you heard from Tyler, the cyclical sectors, the industrials and materials and energy, the bank stocks, they also dropped because bond yields dropped. Now, we know manufacturing is weak globally. The issue is, will it bleed into capital spending? And more importantly, will it impact consumer spending in the U.S. that is essentially holding up the global economy here? And again, I would pay very close attention to some key big stocks out there like Home Depot, McDonald's, that have had big moves this year. Guys, back to you.
All right. Thank you very much, Bob Pisani. Let's get some more on what consumers and people in general think about impeachment and how it'll impact them as well as the economy. We found out these latest readings from the CNBC All-America Economic Survey. Steve Leisman's got the latest details. Steve.
Melissa, thanks. The CNBC All-America Survey for the third quarter finds Americans by a narrow margin opposing impeachment. But the numbers are shifting, with fewer Americans now against it than they were 2 years ago. In a nationwide poll of 800 Americans, CNBC asked if Congress should hold impeachment hearings to remove President Trump from office. 44% favor impeachment hearings and 47% oppose them. Now, that's within the 3.5% margin of error, so it can go either way. It's a lot closer, however, than when the question was asked in December 2017, when 54% opposed impeachment hearings and 41% favor them. So the gap has narrowed. Now, a big chunk of the decline in those opposed to impeachment shows up as a rise in the percentage of Americans who are unsure. It grew to 9% from 5%. Now, there's concern among Americans about the economic effects of impeachment. In fact, 45% think it could negatively impact the stock market, 40% think it could be negative for the economy overall, but just 23% say it could hurt their personal financial situation. Worst news for the president, though, came in a decline in both his overall and his economic approval ratings. Take a look here. 37% approve of his job overall. That is the lowest of his presidency. 53% oppose it. That is the highest, and the gap between the two, the highest as well. And then take a look at this. Is very interesting. 42% now approve his handling of the economy, with 50% disapproving. That gap, the largest of his presidency, one of the largest declines we've seen. The president's concern about the economy, though, came through in a tweet this morning. He said, as I predicted, Jay Powell and the Federal Reserve have allowed the dollar to get so strong, especially relative to all of the currencies, that our manufacturers are being negatively affected. Fed rate, too high. They are their own worst enemies. They don't have a clue. Pathetic. For the record, the Fed does not target the dollar in making of its monetary policy, though it does have an effect. Interest rates are down compared to where they were last year, and the president actually has authority over the level of the dollar. He can lower or strengthen it as he likes. In addition, most economists blame the trade war, not the Fed, for the manufacturing weakness we saw today.
When was this survey done?
Last week.
Last week.
24th through the 20th. This is fresh data.
Before all of the kerfuffle over.
No. After. Really after. Yeah, from
after
Tuesday.
The transcript was released?
It wouldn't transcript out Wednesday. We were in the field when the transcript came out Tuesday through Thursday, through Friday. What day was the 24th? I know the date.
The 24th would have been last Monday.
Through the 28th.
Last Monday. Look at us.
We were in there 4 days. We should be able to do this, guys. A little bit.
I hear Thursday.
Why do you ask, Tyler? You want to know how much that's incorporated?
The 30th was Monday, right?
Right.
So 24 would be 7
It was
days
Tuesday through Saturday. We were in the field for 4 days.
Regardless of the day.
Right.
Why do you think Americans connect impeachment with the impact on the economy? Do they see a connection by strengthening a progressive Democratic candidate, for instance? I mean, do you get a sense that
almost all of the concern, the biggest concern about the economy comes from Republicans? They believe that if there is impeachment, the economy, the stock market will both suffer as a result of impeachment. Because President Trump would lose his job in that process. Right. Republicans are twice as likely to be concerned about the economy due to impeachment than the Democrat is. And independents, who are independents, they're right in the middle of all that. And the big story here is going to be independence when it comes to impeachment and all of these other issues, because they're the ones right now, they're 42-43 against impeachment, right in the middle right there. 88% of Republicans oppose it. 76% of Democrats are in favor of it. That number is actually quite low. That's 76%. You would think more Democrats would be on board from what at least we came up with, 76% of Democrats. So our pollsters suggest there may be more upside, depending upon what is revealed from here, for the favor. And they do think public opinion is a key part of why this process will or won't go forward.
Obviously, there's impeachment and then there's conviction.
Right.
And the idea that he would be convicted by the Republican Senate is relatively low, the probability of that.
We asked
at this point, based on what